Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Tuesday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and the bottom dropped out yesterday. If you want to call it a major correction, if you want to use the C word and call it a crash, the fact of the matter is we went limit down. NQ went limit down, and then ES went limit down. To go limit down before we even open is that's some serious volatility. And what we ended up with, especially in the morning, was a market that wasn't really tradable if you're just a regular person, and that's what I have in my room is a lot of just traders, just like you and me. And so for a while there, I mean, we traded in the afternoon, but in the morning we didn't do anything. And the reason we didn't do anything is because unless you're willing to take your trading account 15, 20, 25 handles in the hole on a market with bid and ask spreads that are in handles, not ticks, where a lot of the charting software that certain retail traders use doesn't work, unless you're willing to do all that, it was really not a tradable environment. If you can't gauge risk, if I can't sit in my chat room and say, okay, your risk is 2 handles, your risk is 4 handles, your risk is whatever, 5 handles, that's even a little wide for us, then it's no trade. And it looks great on paper. You see these 30, 40, 50 handle swings, but you got to understand, number one, you got to get filled. Number two, you got to get filled in a way that doesn't take you 30 handles in the hole, so you end up getting, margined out anyway on any normal size account. Then it has to work out, okay? And if it works out, if you survive all that, that's great. If you don't, then you're probably done trading like forever by noon. So these are all risks that, that I, as somebody who really cares about our folks, just not willing to take. Compound that with the fact that all of our targets for the month with respect to performance were met. And at that point, you sit it out. So we did. We sat it out until about about 1 in the afternoon, 1:30 in the afternoon. We did some shorts up at the 50 area. Then you had another short at the 20. And those were fine. I mean, I got burned on the 50 because it shook me out back through, but then we failed at the 20, and then we got back in, and we rode that one down, took it back up, did it again. So it turned out, by the end of the day, more than enough handles were there to be made. And the reason I'm saying this is because if we ever get in this situation again, and you feel like you absolutely must trade, that's nuts. You don't. If you think that you got to be trading because yesterday was the most exciting thing in the world, you really don't know what you're doing, and you need to reassess your basic fundamental take on risk and what is a safe environment to trade. If you're a very experienced scalper, if you have a gigantic account, that's cool. You can do that. But for the vast majority of people, the best decision yesterday morning was not to trade. All right, so where are we going today? We stopped shorting yesterday at the close. We were done. It was very apparent that 1870, which was the area where we did the first limit down, that area was going to hold. It held, it broke through, it held for the morning, and that's basically where we closed. It held through Globex, and we've been moving higher. We went up to test the second standard deviation lower band, which is what you would expect after this kind of a move. You would also expect the second standard deviation lower band, at least the first time around, to be resistance. That's what's happening here too. So in a certain sense, for me, at least on my stuff, the market is normalizing a little bit, which tells me we'll have some more reasonable opportunities today versus yesterday. Let's get over on the 5-minute chart, and I'll zoom it out a little bit. Here's your 1870. That's where we went limit down. took it down to 31. They whipped it back through. After they got it through here and held 70, it never looked back. We came back to retest it at the close, and it became support. We came off, support at the daily pivot. We talked about that on a subscriber webcast I did last night. The daily pivot had to hold as support. It did, and it did again, 2 o'clock, headed into 1 o'clock, headed into the 2 o'clock hour. We rallied off of that up into R1 and up into the lower band, and we're getting some resistance there, which you would expect. Okay, so what do we need to see? Well, 1950 is big on the upside. That's where we failed yesterday afternoon. Okay, if the bulls are going to have a complete day, they've got to get through 50 and go to work on 63, 72, the areas like that. It's possible. Look, if we get into some kind of a serious short squeeze, don't think for a minute you can't see a plus 5% day to go with yesterday's minus 5% day. I mean, how many times have we seen that? If the bears want to continue to press their advantage, and they have a clear advantage, then the 1950 area has to be defended. The lower Bollinger Band on the second standard deviation lower band has to be defended. And they need to push back towards daily pivot, and they have to try to break 70. If they can break 70, then they can make a slow move or maybe a big move back down to retest these lows at 31. But the delineator is from 1870 to 1888. That's a band. Normally I talk about 4 or 5 handle bands. Well, right now I'm talking about an 18 handle band because that's how volatile we are right now. Okay, it's still not a market where 2 handle stops are really going to work out for you. So if it's still too volatile for you, there is no shame in sitting out another day. Market will be back tomorrow. If you're desperate to trade, you need to put yourself in a situation where you are no longer desperate to trade. Nobody should be desperate to trade. Okay, that's all I got. Follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room. Yesterday was a record day. Never had that many people in before. And it was nice to be able to interact with that many people on a really tough day. So come check out the room. It's really humming, and it's a great place to trade. I mean, I love being in there every day. So come check it out. I'm doing another webinar tomorrow after the close. The sign up is attached to this post. It's also up on my Twitter feed. This is the same one I've been doing every Wednesday after the close. We've been getting really good feedback. Take a look at where the market is, where we're headed, do a Q&A. If there's a lot to talk about and a lot of interesting questions will probably be asked, so come check that out. All right, have a good one. I'll be back tomorrow morning with another webcast. Trade 'em well.